Hello again, everyone. In this technical analysis of the stock market video, I call it tension builds because that's what's happening right now in the market. We have one more trading day in the third quarter, close out September, and then we're going to begin October, which, as Goldman Sachs says, is the most volatile month of the year. So we have trade tensions building, supposedly trade discussions going to happen in October. We have impeachment inquiry going on. We have weakening economies. Europe is getting weak. Some signals going, very much starting to weaken here in the United States. And we'll see what happens here in the next few weeks. And if we look back here, we're going to focus on the Nasdaq Composite, the Russell 2000 today. And then I want to look at oil and I want to look at the high yield bond fund. But if you look at the Nasdaq here for a minute, several weeks ago, actually, I think it was 3 weeks ago, I put out a video. And the video was called, The Bulls Have the Ball. And so right here where I've got this highlighted, this is September 6th, and that video was put out on September 7th. So right now it appeared that the Bulls had the ball. It looked like we were going to move and thrust to the upside. Really thought maybe we were even going to take out the highs from July. 1 week later, I produced a video, and it would have been right after the 13th here. That I called it a new hope because really the bulls were pushing higher. We were at the top of the Kellner channels. It looked the moving averages were aligned to the upside. Looked like we were going to take out the old highs. And then all of a sudden over the last 2 weeks we appear to be rolling right on over. And with the move that happened on Friday, we have a moving average cross to the downside. And on the Nasdaq, that's only happened twice this year. It happened back in May. And it happened in August, early August. If you look back, we did not get the 10 exponential crossing below that 21 simple. Those were the only 2 times, okay? And we've now got it again. Now, that's no guarantee, but it is a fact that it's happening on the Nasdaq Composite. The Nasdaq was down 91 points on Friday. This trend line in here, it broke it intraday for, just a little while, then pulled back above it. Interesting thing also is on Wednesday, we had this potential reversal candle in here. Same thing happened and showed up on the S&P 500. And I say potential reversal because you need follow through in order for that to really fulfill itself. Okay, but did we get follow through? No. Thursday, we didn't even take out Wednesday's high. And then we come down on Friday and we take out the low of a reversal candle. That's pretty negative. So it's going to be real interesting to see what kind of follow through we get. Let's look at the week. For the week, it was down 178 points. It closed below the trading range of the last 2 weeks. Now, when I look at the Elliott Wave pattern right now, I've got to be leaning towards the bullish scenario or the bearish scenario. We're looking at both of them actually. I mean, you've got to keep both scenarios in play from the standpoint of looking at possibilities, okay? But right now you've got to say in terms of where's the probability, how does it look like? It looks and acts like it wants to roll over and come down. So right now my preferred count to the bearish side is that we're doing a big flat, that we're in a fourth wave still, okay? And that fourth wave is playing out as a 3-3, and I'm expecting a 5-wave move to the downside. Okay, now, in terms of timing, am I expecting this to be out here? It's really, really too early to tell as to how long this wave is going to take. We need to see how these other waves unfold in here. And if this is truly a third wave, this really needs to start accelerating to the downside, as third waves typically do. Okay, so that's the picture. That's what we're looking for. Let's take a look at the Russell 2000. Now, the Russell 2000 was down 12.85 on Friday. This continues to look and act very weak. We have had nothing but lower highs and lower lows being put in here on the Russell 2000. And also interesting that we didn't quite have a reversal candle on Wednesday because it never took out Tuesday's low. So we really had some compression going on in here. Thursday was an inside candle to Friday's trading range, or Wednesday's trading range. Wednesday was an inside trading range to Tuesday's big move. Okay, then all of a sudden Friday we take out the lows of all three and come on down. Now we don't have the moving average crossing to the downside just yet, but that's the current picture. Let's take a look at the weekly chart. Here on the weekly view, you can see how this pulled back to this trend line that was broken back here in early August. And now we closed down 39.29 for the week. You can see that up here. And by the way, if you're ever wondering what the time frame is that I'm covering, I've got it stated right here. Here's the instrument that I'm covering. And then it also shows the time frame down here highlighted. So that's the picture there. And I've been leaning into the bearish scenario here on the Russell for quite a while now, and it just continues to play out. I'll say the one thing I don't like this whole series of 1-2s, but sometimes that happens. We'll see if this continues to play down to the downside like I'm expecting. Right now, I think that we're in the third primary wave, and within that third primary wave, we're in the third intermediate wave. And within that third intermediate wave, we're trying to work our way down in terms of 5 waves also. Now, again, this third wave is not this, don't assume that I've got it here because that's where I think it's going to end. It's just down here as a placeholder until we start to see. A lot of times what we'll do is we'll project in terms of, based on Fibonacci projections, how far I think a wave may go. But then as we start to unfold the wave structure in here, we'll then determine, okay, how does it look in terms of its projections in terms of parallel lines and wave structure, all of that type of thing for timing. Right now, this is the path to the downside. I kept thinking that, when we were looking for that potential bullish scenario at the beginning of September, I kept thinking that maybe this was going to break the highs up in here. If we go back to the daily view, I had a trend line across the highs up in here, but it never did it. I mean, you look at the run that it made up to that trend line. I had a trend line across the highs here. It made right up to that trend line. I mean, literally, it went right to the trend line, and then it just sold off. So right now, I got to say, leaning to the bearish side here, especially in the Nasdaq Composite and Russell 2000. Let's take a look at the high yield bond fund. HYG seems to be telling us risk off. Okay, it's closed below that 10-day moving average for the last 4 days. It's been down 5 days in a row. It sure looks like it's trying to roll over. It's broken this trend line in here. Now, sometimes, I mean, you break a trend line. It's no guarantee that you're getting a major sell-off. A trend line just simply means the momentum has been broken. It could chop sideways or it could continue to sell off. We've got to watch and see what this does. This looks like it's getting very close to possibly breaking and having moving average to coming down here. But right now, this is in sync with the market movement. It's not saying anything different. Let's take a look at oil. Here's USO right here. Now, oil, look at this pop that happened. Okay, so here's Friday the 13th. The attack on Saudi Arabia happened, the explosion to the upside. Did this go anywhere? That was it. Monday was it. And then it sold back off. And then look what it's continued to do. I still have held a bearish count throughout all of this. Let me make sure I've got the right. That's not my preferred. This is the preferred view that I'm working. Now, because right now I think that there's a decent chance that this impulse is going to continue to hold and it's on down in here. There for a while I thought, well, maybe we're doing some kind of ending diagonal because I do think we're in a 5th major wave to the downside, and I'm looking for 5 waves to come down in here. And so right now I am still looking for this 3rd wave to complete, and I need to see some confirmation that we're breaking this trend line. And look how it's come right back down to this trend line. I've had this trend line drawn like this for weeks now. Okay, so that is the picture on oil. I am still expecting it to sell off, break that trend line, and come on down. All right, that's the picture for this weekend. If you felt like the video was helpful, hit the thumbs up. And if you're not a subscriber, hit that subscriber button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net, where Beyond the Chart is the name of the website, and check out the membership. Everyone have a great rest of the weekend. We'll talk to you on the next video.